All right, welcome back to the channel. Today we have FOMC around 2 o'clock today, Eastern time. So I decided to stay out of the market today. I did see two opportunities which unfolded early on. One simply around 9:40, 9:45 this morning, shortly after the market opened up, and then another one roughly around 10:45. And I'll talk about both of those setups. This is not a video covering the trades that I actually took. This is more so a video to help those out there that are possibly scouring the internet or trying to find a strategy that would possibly work, trading supply and demand, because that's the means and how I trade. But I trade range-based charts. I don't trade time-based or tick or volume. So please don't ask me, which charts are comparable to when it comes to time versus range-based. I don't know. I trade range-based. So you have to kind of do your own homework, or you can come over to the Discord community and ask some members, and I'll put a post out there and ask, does anybody trade time-based charts? And if you're interested in the Discord community, yes, it is free. You can find the link down in the description portion of the video. But let's move on, because I want to show you that there was a setup for all those that could be asking or probably are going to ask. I really didn't see any setups today. What would have been some opportunities? So let's cover that now. But at the same time, this is a video talking about the strategy. Again, maybe you're a first-time viewer, and if so, welcome to the channel. Thank you for taking the time to view. Hopefully, we can gain you as a sub here in the channel. I appreciate you watching. So let's jump into it. Now, the strategy just basically and how I trade. First and foremost, I have to be able to understand what's going on with the market as far as structure wise. So we'll look here at my higher base chart and looking at the 60 range. We do see the market, moving to the downside right here. We see this channel to the downside, okay? And yes, it was breaking structure when it moved lower, but it did turn back around yesterday, around 10 yesterday, and it started to break structure back to the upside after it broke above here around 152, meaning 18,152. So when I saw that yesterday, you can look for opportunities to go long, all right? But be mindful that we did have some structural breaks to the downside. So there are key areas or zones to where the market could tap and could have bounced or rejected. Like right here, this was a supply area right here coming off of this break of structure to the downside. So this is the reason why the market reacted when it got to that area yesterday. And this area, which took place today around 8 o'clock right here, this was a supply zone. If you took this trade this morning around 8 or shortly after, this right here would have been 9:30. But this is basically a pullback again to the area, roughly around, definitely so at 8 or again, maybe around 9:30. I don't trade the market opening, but it was a beautiful sell to the downside, okay? Because this was where the market broke structure. This little swing right here, you see that aggressive selling right there? It aided in the structural break below here at 285. So this would have been it was a decent retracement back to a supply zone where you could have, and it was untested as well, okay? So for all those that have a hard time seeing that zone, it was right here where I had this red line at. This was an untested area of supply where the market reacted at. So, but that's not the area that I was going to focus on. I was going to focus on because I trade typically 20, 25 minutes or 30 minutes after the market opens, after the volatility settles down. I'm looking for trade entries. So this right here would have been this zone right here where the market pulled back to this high probability untested area of demand, okay? Because again, we started breaking structure to the upside. And when we did that, you can look for, possibilities to go long. So this was a break of structure continuation to the upside here after breaking structure right here. So this was just a demand area resting right here off a break of structure, and it pulls back to it. So when I see setups like this, especially when we have a break of structure and we have a key area of demand and it's untested area of demand, meaning where there's a gap back at it, hasn't never been tested prior to, I'm very interested. So what I do then is just move down to my lower base time frame chart, my 12 range chart, which is my entry chart, and look for the remaining portion of the execution of a trade, or to get into a trade, okay? So the remaining portion of the strategy to unfold, meaning the step-by-step series I look for to allows me to get into a trade, or gives me the go to get into a trade. So let's move over to now to my 12 range chart. Those that have been following the channel for some time now know that, okay, now on my 12 range chart, this is pretty much the last leg of the steps that I'll look for before I get into a trade, all right? Or it gives me the confirmation to get into a trade. Well, What I'm looking for now is basically a structural break to the upside and pulling back to a key area of demand. Now, sometimes it may not always be a high probability zone where we have a gap or untested zone at. Sometimes it can pull back to a low probability area where the market has already tested, say, a demand and supply zone. In this case here, an area of demand because we're looking to go long. All right. But if you notice right here, when the market came down, it tested this area here. Look what happened here. We got a structural break above this area here at 267. And when it breaks above that area there, I'm just looking for a pullback to a key area of demand, meaning a creation of a demand zone. All right. So there was demand right here. There's demand right here. This is tested. And yeah, so right here, so you can see the area of demand, aggressive buying right here, aggressive buying right here. It broke structure again at 267. When it did that, I'm looking for an area of demand for it to pull back to. Now, this would have been untested here, but it's higher up, but this was untested and this was tested. It came back, it broke through this area or this demand zone resting right here and tested this area of demand resting at 257, which was tested. But what it did do was, once I get the break and close of a candle to the upside, I'm going to go long, right? In this case here, I would have gotten into this long a little earlier because it was, do you see this? This hammer candle right here. I always talk about the market tests the zone, wicks it, and pulls away from it. That's, that's interest that they want to go higher. Okay, so you got to understand that they definitely want to go higher. So, or you can wait for the second close of this candle right here. So you get two bullish candles right there coming off of this demand zone where it wicked at. Go long. I would have definitely went long there. And where would I have taken that trade to? So I probably would have gotten into the trade around 259. Maybe you would have got into it at 260. But either way, we're looking to take this trade back up to at least 267, and you pick yourself up 7 to 8 points pretty easy. Okay, and maybe if you're looking out at maybe a higher base chart, maybe you'll see something where you can have basically trail behind price or look for the market to target higher areas, meaning capitalize more profit. Okay, but in this case here, even if you wanted to try to trail it up, say for it to go actually go higher, maybe test slightly above here at 81 or maybe even higher, I talk about how you can do so in a few videos. Basically, we're trailing behind price. Each time it makes a higher high, a higher low, and then a higher high, the last higher low that it made, move your stop loss up, and that way you're trailing behind price and you can maximize on taking profit as it continues going higher. Now, let's say you took out here around 267, 268, pick yourself up 8 points. Okay, depending on the number of contracts, that 8 points could have been very nice for you, or even one contract probably wouldn't have been too much, but still 8 points. What's that? That's 32 ticks. Okay, so for each contract on that 8 points would have been 32 ticks. Okay, so if you traded 2 contracts, then that's 64 ticks. So then we just wait for another setup, right? Now the market has not really been moving a whole lot today, and when we have a major news event, this is what we're going to have. You see it kind of moving sideways before it, it's probably going to at some point, from 1 to 2 o'clock, especially getting around 2 o'clock, the market is going to start picking up. We're going to start to see a lot of volatility. Okay, so, but maybe you were able to hold that trade. Here we go right here. So it gets up here. It hits 267. Okay. And the entry point, where did I say? I'm sorry, right here. Let's say 260, right? All right. You got in here. It goes up 267. All right. And you got your profit. Okay. But then it comes back. All right. So you're saying, well, if I would have held the trade, then it probably would have stopped me out. Yeah, but you lock your profit in, okay? You lock your profit in. Maybe you put your stop loss right here at 260, and it goes up here, excuse me, and it takes you out 267 because you took profit. Or you took profit on one contract, and then it came back and stopped you out on that last contract. But still, if you look at what happened there, you did not lose anything. It basically came back and stopped you out at break even if you put your stop below this area here at 260. Now, let's say you may be asking, well, could I have gotten to that trade again? Of course you could have. Let's take a look here because you can see the market's just ranging here. But what I like to see now is this right here. You see how it continued pushing higher and it broke above this level right here at 280, above that, right at 286. Once it did that and it came back, we basically pulled right back to this area of demand. Again, right here. It pulls back to that area of demand again. It's tested it several times. Sometimes the market will do that, especially when we, if it's just kind of ranging in a bounce. But that you'll see that happen a lot of times during, big news event days. We'll kind of just range for a while, and it may hit in a certain zone several times. And you can scalp that if you really know what you're doing. But once it broke above 286 and took out this area of resistance pretty much right here, it pushed to the upside and it came back again. When it came back around, say 1050 or around about 1050, look what unfolded again, because then you can also be looking, you can look for opportunity to go long again. Again, we have broke structure to the upside, okay, right here. So now we got another area of structural break to the upside, pull us back. All right, and when it pulled back here, all it did was, create another bullish swing to the upside here and leaving some areas of imbalances or gaps back up to the upside. So when it came back at 1050, you could look for opportunity to go long again. So let's take a look at the lower time frame chart around 1050, which was right here in this area here, okay? So it comes back again. What are we looking for? A structural break back to the upside to do what? To go long. So we tap back into the zone. All I'm waiting for now is really the market to, again, break structure to the upside, look for an opportunity to take a demand setup going long now. So then the market, again, it bounced off that area. That was from that higher time frame, a higher base zone, the 60 range. Then it comes up. What does it do? It breaks structure, say, let me see here for 1 second. Yeah, break structure above here at 270. So it breaks up there. And all we're doing is looking for a pullback to a key area of demand. This case here, this is a demand area right here. You can see the aggressive buy-in, demand zone untested. You get the break and the close of the candle, but because it wicked right here and it pulled it away from it, I talk about that in many videos. Lots of times when the market tests a zone and then quickly moves away from it where it doesn't close deeper into the zone, meaning it wicks it, pushes away from it. In this case here to the upside, you can look for the the closure at 270 go long. But if you to be more safe and more conservative, you can actually wait for the break and close above here at 271. So once it breaks above there, you can go long, and you're going to aim for definitely higher areas up here, all the way back up where this imbalance is at 288.5. So let's say you got into the trade, I don't know, maybe around 273, maybe 272, 271, a little sooner. Take it up to 288. It's got to feel those imbalances back up to that area where there's a high at. Right here, you see these imbalances? There's imbalances resting in between. There's one right here in this zone here, and there's one in this area here that needs to be filled. So it's going to go up there to 288 and fill that area. So right here at 250, at 1050, which I just showed you at the lower time frame, wait for the break of structure, breaks above here at 270, boom, break, pull back. Now this was a little higher up after breaking that structural area there. When it broke there, I typically like to see it maybe pull back a little further back into a swing. This was a tested zone here, but this was untested, and that's fine. If we get the rejection, then we can look to go to go long, and that's what it did. It broke higher, pull back, go long. So this right here would have been a zone right here that I would have been eyeballing because we have aggressive buying right here. So great, sweet opportunity. Again, if you're taking that trade and got in, let's just say you got in here being very conservative at 44, taking it up to 88, you'd have picked yourself up 14 points right there. So you would have picked up 14 plus the 8. That would have gave you a total of 20 points today total. And per contract. So if that was one contract, so that's 80, 80 ticks. Okay, so 20 times 4 ticks in a point, that's 80 ticks. And if you would have got in on two contracts, then that's 160 ticks. That's nice profit for you today. So I just want to share that with you because a lot of people, even in a day like this, they have a hard time possibly, or maybe they just stay out of the market. Sometimes it's best when we have a major news event like at 2 p.m. the FOMC to stay out of the market. But again, there was, for me so far, 2 sweet opportunities to get into the market today. Actually 3. This would have been a nice pre-session trade to take, pre-market at 8, and a lot of times you find some great setups before pre-session. Okay, that's what I'm trying to say. So you could have taken a short here, and then a long here and a long right here, and man, you'd have had a nice day today. But I just want to share that with you guys out there. Again, this is not a trade breakdown or where I'm going over trades, whatever the case is, that I've taken and posted over in the Discord community, which I typically do. I think I did one yesterday, kind of covering trades, but or at least showing the trades that I took. Okay, now if you want the full-on breakdown of trades, meaning to where I go into great detail discussing my thought process and why I took certain trades, I have a series of videos. Okay, and this is for those that want to become elite members And basically what it is, you'll see you'll see a link right below the Discord link, which is the Discord's free. Right below that in the description portion of the video, you will see a link that says become a elite member. And what you receive is the trade breakdowns. I have a series of videos on there to where I've covered trades that I've taken and broken them down in detail so people can understand, because people want to know, what's your thought process? What were you thinking leading up to the trade? Why did you get that trade? Where's your TP at? Talking about stop loss, all those type things, so that you can so that you get an understanding. It's as if you were sitting right over my shoulder and I was showing you, and walking you through. But also you get the video playlist. All that is a series of videos that I hand selected, pulled out of off the channel here, and just kind of made them, just a series of videos that I think that cover pretty much in detail. Majority of the information, or the great bulk of the information surrounding the strategy and how I trade. But I tell people all the time, whatever you're trading, whatever works for you, if it's working, stick with it. Okay. Or you can take something that someone else has already showed you, back test it. If it works, then you stick with it, and you can make it your own by adding something additional to it. But just depends on the individual. But if you're interested in becoming an elite member, again, the link is down in the description portion of the video. Because people are always asking me, they send me messages all the time, and it's just additional private videos that you receive outside of just watching the public videos here on the channel. But it's $6.99. That's all it is, a month, not a week, not a day. That's a month. $6.99 to gain access to that additional information or additional video content, which is the trade breakdowns and that video playlist. But you also receive like the basic stuff that YouTube gives you, like the emojis, the badges, the priority reply to comments. And this is just my way of giving back to those individuals, which is a whole lot of you guys that, and I'm very thankful that you guys have done so, because you're supporting my efforts as a content creator, and you're taking value in the information I'm sharing. So I really appreciate that to all those that are members. And thank you for your support. But if you're interested in becoming a supporter and support my efforts here on the channel, you can just scroll down to, again, the bottom portion of the video in the description, and you'll see a link that says become a elite member. 2 tiers will pop up. Make sure you choose the one that says elite channel supporter or elite channel member for $6.99 to gain that access. Outside of that, I appreciate everyone tuning in to the videos on a daily. If you are not a current subscriber, please take the time to go ahead and subscribe to the channel by clicking the sub button, and make sure to turn on all your post notifications so you never miss one of the uploads that I post here on the channel. Videos like this, which I covered today, I do these, I go in a whole lot more detail than just this, guys. A lot of times I go over trades, talk about the strategy. So much video content here, so much valuable content that I cover here on the channel. So, if I was you, I would go ahead and take the time to go ahead and sub to the channel. But if you found value in today's video, please drop a like on today's video. I appreciate it, and I'll see everyone in the next one. Take care.